Hi, today we are discussing about the Q3 FY19 performance of Axis Bank. The headline profitability number was extremely encouraging. While there was an element of one-off in the other income, the core performance was strong and there were many positives to take note of. First and foremost, the growth in business was very healthy with deposits growing by close to 26%. While the low-cost CASA deposit was supportive, the main growth came from a surge in retail as well as wholesale term deposits. In terms of advances, the headline performance was muted at 13%, but this was because of the degrowth of the international book. The domestic book actually grew by a healthy 18% driven by retail, and now the retail share is close to 49%. The bank saw an improvement in its net interest margin by close to 11 basis points sequentially to 3.47%, and the management is quite confident of maintaining this improved trajectory. However, we got to mention that of the improvement in net interest margin that we have seen, 5 basis points came because of the recovery from written off account. In fact, in the quarter under review, the bank saw 998 crore kind of a recovery from written off account, which is a huge improvement from the 40 crore that we saw in the year ago quarter. And they also garnered 342 crore out of monetizing stakes. One important point to note about Axis Bank's result is the improvement in the quality of the book. The bank has seen that out of its SME book, close to 86% are rated now SME 3 and above, and close to 82% of the corporate book are rated A and above. And this is also borne out by the fact that the ratio of the risk-weighted asset to total advances to total assets is actually falling, and the bank is adding to its core capital. Finally, asset quality was stable, and the bank created an ad hoc 600 crore provision on account of its NPL. And even without this provision, the provision coverage ratio has actually improved to 75%. Now, what were the negatives in the result? They were few and far between. Something worth noting was that there was a slight dip in the CASA ratio to 46%. There was a tad increase in the gross slippage also to 3,746 crore, which was a little higher compared to the previous quarter. But we got to mention and remember that the recovery was also quite healthy. And finally, there was a slight divergence which was pointed out by RBI, but nothing much, only to the tune of 225 crore, which had already slipped into the NPL in the first quarter. And there was an ad hoc provisioning requirement by RBI also to the tune of 99 crore, which has been taken care of. Now, coming to the outlook for the stock, investors got to remember that Axis Bank has now got a new CEO, and they have laid out a 3-year roadmap of reaching 18% ROE, riding on the 3 pillars of growth, profitability and sustainability. The asset quality is definitely improving, and we would see a steep decline in the credit cost going forward, which would be a big kicker for earnings. Given this backdrop, we feel that there is an immense scope for re-rating from here on, and Axis Bank should form a part of the core holding for any investor. Thank you.